Bill Gross of Janus Capital out this morning saying there's two things, 20K's out there and then 2.6% on the US 10 years out there too. Forget the former, focus on the latter, that's important. Why?
Yeah, but Bill Gross's note was interesting today. You know, he's like everyone else, he's sort of confused, and there's a lot of uncertainty about the fundamental picture going forward under Trump, you know, what is really going to become tangible and what's not. But he said it's kind of soothing to look at the technicals, and I guess I agree with him to some degree. So he looked at, I have a chart on my Bloomberg screen here. He looked at basically the super long-term trend in treasuries. This is more or less the graph he used. And if you look back, starting in 1987, I mean, treasury 10-year yields were above 10%. And we just had this steady bull market in treasuries pushing yields down. He's looking at 2.6% on the treasury yield as the sort of danger zone. That would be about the top of this trend here. And he's saying a bear market in treasuries really could be signaled by that. What I find fascinating about this trend, though, is this is a trend that, you know, this is a trend that's made to be broken eventually. Look, the treasury yields, I don't think anyone expects them to keep going to zero and negative, and that's what would have to happen for this trend to continue indefinitely. So it's bound to be broken at some point. It sounds like, you know, to Gross's thinking, breaking it now is a little too early, and it's going to signal a bear market in treasuries. That will obviously impact the level of stocks. Yeah. You know, he's saying ignore $60 crude, ignore Dow 20,000. And there's been a lot of sort of technical attempts to explain, you know, this treasury market. This to me is one, you know, I've seen similar ones like this long-term trend. I think a lot of people are focused on this to see, you know, will technicals take over and sort of knock out the reflation theme for the time being? Well,
the fundamentals that took us there, the aggressive central bank targeting of inflation in the 80s, squeezing the nominal, then the structural forces squeezing the real yields throughout the last couple of decades as well. Is that going to change anytime soon? Well,
I think there's signs that not only from Trump, but there's obviously inflation pressure building around the world. If you look at China's PPI today, it was 5.5%, almost a percentage point more than estimates. That is obviously going to bleed into U.S. import prices. And so there is pressure coming from, you know, throughout the world. There's a good Bloomberg brief out this morning that sort of canvassed all the best forecasters out there. Yeah. And the consensus was basically they expect inflation and economic growth, too, which is important, to both surprise on the upside going forward. So we'll see. You know, there is still this sense that even though, as Alex pointed out, yields have rolled over a little bit since about the middle of December, there is still this sense that, you know, this inflation is finally beginning to perk up and will continue throughout the year.
Alex mentioned financials as well. And financials, Goldman Sachs getting cut by Citi this morning. Quote, the risk-reward just isn't compelling. Julian Emmanuel over at UBS saying it's time to take out some puts ahead of earnings seasons on the financials themselves. Yeah. We've had a massive rally. What needs to happen to validate it?
Well, obviously, I think, you know, you're going to have a pretty good quarter this year. A lot of trading. Yields did perk up. I mean, we'll need to see these yield curves both stay higher. And there's also a lot of deregulation built into the financial stocks right now. So, you know, I think bank investors are really going to be looking for some sort of looser regulations early on in the Trump administration in order to keep a rally like this going.
Aside from financials, is there a global reflation trade here in the U.S. that is also kind of a concern now for investors?
Well, I think I've been calling it the reflation negotiation. You know, obviously it took off out of the gate after the election, and again, those yields have rolled over a little bit. So it's a question mark now. I think a lot of people are wondering, you know, what is the real trend going forward? Is it going to be higher yields? Is it going to be a stronger dollar at the same time? And you know, I don't know. I'd hate to be the one to have to forecast that.